everyone, and welcome to another Sunday session. Today we have talked about gaps, how to look at the intraday charts, how to look at your channels, how do you define a trading range, and lots of other things based on which we take our trades on an intraday level, right? So stay with us, and as always, please like, share, and comment on the video, subscribe to the channel, and click on the notification icon.
The main question was that how do I define my support and resistance levels? What I normally do is on a regular basis, the 5 minutes RTA chart is very important, right? So whenever you see that there is a sideways movement and then there has been a good bounce from there, those are the areas that creates your balance zones, right? So whenever there is a sideways movement, what does that mean? The sideways movement means that the buyers and the sellers are both agreeing that at this given point in time, price is in a balance zone or it is the fair price of that instrument at that given point of time. Until and unless there is a push out of that balance zone, some kind of a retest, and then we start going up again, right? If you see a similar thing happened here, and if you see on a 5 minute chart, that balance zone can be one single bar as well, right? So that is what we need to look out for. And all those bars, when you look at the 5 minute time frame, most of those bars which start creating your sideways movements are range bars, and they mostly look like these. Okay, so there's a body, there is a top wick, and there is a bottom wick. And most of the time what I have observed is the body, the top wick, and the bottom wick, they are almost equal. Okay, and that is what trading view has a term for that. Okay, there is an indicator which I don't put anymore, but let me show you. What is that called? uh, Spinning top. So spinning top, black and white. Okay, so if you see, those are where the balance zones get formed. See this balance zone right here. Okay, so this balance zone got formed right here, and then we came out of it. This was the gap creation. We bounced out of there, right? So this is how the balance zone gets created. Now, it is not always that it will always result in a dump, but if you look at it, if you find these kinds of candles in areas where a wedge is getting formed or something is happening, you can 90% of the time I've seen that they result in a two-legged pullback, right? So this was the wedge, and the two-legged pullback happened. We got another strong bar, and we kept going up. Right, so that is, and then again, see, this is the wedge here. Again, the spinning top happened, and they tried to sell it off. They were unsuccessful. We got a micro double bottom. We made one more leg up, right? So that is how it moves. Now, how I mark it is I look for, let us remove all these things. How I mark it is I look for these areas, okay, and these areas are the ones that will form support again when price wants to come back down. After this area was formed, we have the next area right here. If you see, there was sideways movement in this part. Correct. And if you take this and you extend it to the right, you will see that is where all these days kept on bouncing exactly at that point. This tried to break it down, immediately took it back up, and this already was telling us that hey, this is going to be a kind of a false breakout. And we went back up again. Where did we go back up? We went back up to the previous area where we had a balance zone. So that is why I say that the market moves from one balance zone to the next balance zone until and unless there is force enough to push it out of that. So now we pushed out of it. When we came back down here, we got support at the exact same balance zone, and we started bouncing from there. So whenever you are on the RTA chart and you see that you are in a trading range sort of a market, it is very important that you mark these balance zones and see how price is reacting to that. Okay, and how I expect prices to move like these ones. So here the idea was that okay, we sold off from here multiple times from this area, so there will be one more time that it will try to sell off. It did not come down completely, but you have to wait for that for that 50% line, right? Because this was a tight channel, and there is a possibility that it will not come down all the way through, and it will keep going up. But it formed another balance zone here. But finally, this balance zone failed, and in the ETH hours, if you go back to this time, you will see it actually came down to this balance zone from where again we bounced and went back to this. So this is how it works. And when there is a crazy move like this, a tight bullish channel, I normally do not try to short it. What I do is I put my 50% line here. I put the whole fib on the day, see if they are about to come down to the 50%. If they are not able to come down to the 50% and they go above the 100% again, most of the time what happens is you try to extend this. If I get this leg, you try to extend this to the top again. So we were almost back at the top again at 5388. So if the 50% of this was not broken and goes up, and then you have resistance here, right? Once it goes up, it came back down to retest that area multiple times. It came down once, it got support. It came down twice, we got a outside up bar, and then we tried to reach this. I mean, if the market was not closed, maybe we would have hit this target that day, right? So that is how I keep looking at where the market is going to go. This is a part of my measured move calculation, right? Again, one more thing that I keep an eye on is the 15 minutes and the 30 minutes ORB, right? So here, if you see, this was the beginning, this was the end of the 15 minutes. We came to the 15 minutes ORB exactly, right? And then we started bouncing. When we started bouncing here, that means, and it is not going to come down, it means that once it goes back up here, you can actually target the 15 minutes on the flip side if it holds above this open of the day, right? And then again, if you see, there are the first six bars, 1, 2, 3, 4, 5, 6. So all six bars are contained within the same range, right? So if you are saying that this was my 15 minutes ORB, this becomes your 30 minutes ORB, right? So 1, 2, 3, 4, 5, 6. This is the top of the 30 minutes, bottom of the 30 minutes. We never went there. We went back up. So now what can we expect? That okay, if it's a bullish movement, and if this is my 30 minutes ORB, we may get to the 30 minutes ORB and see exactly that is where we created another balance zone. Right now, since we are above this balance zone and we have a new balance zone here, what we can do is we will say that right now this can work as a support area for us. It may come down here. Okay, now how I throw balance zones out? When do I say this balance zone does not exist anymore? It is when we go above the balance zone and then get a follow through. That is when I will say this balance zone or this gap does not exist anymore. Now, when I talk about gaps, there is a concept that you need to understand is if this is a bullish gap, let me remove the fib. If this is a bullish gap that has been formed, let me draw it properly. If this is a bullish body gap that has been formed, or if this is the primary bullish gap that was formed, the bulls actually started pushing from here, right? They started pushing from this point, from 5370. Correct. This is the gap they created because of the push. So there will be bulls below this gap as well. So if you are long here, and if you think that 79271, it's 9 points, right? This is a 10-point bar. If you think that this may be too much of a stop loss for you, you will have your stop loss when it comes down and closes below this balance zone. You will put your stop loss one tick right below that, right? So you don't have to wait for this much, because if the balance zone is getting violated and then it is trying to bring another bar down, that is when this gap is gone. So I consider a gap to be decimated as soon as there is a crossover from the gap and then there is a uh, follow through after that crossover candle. So which means that the bulls that were here that created the gap, bears were able to destroy this gap, and still sell a little bit more down. But will I sell there? No, because to sell here, I need this whole candle to be taken out. I need the whole candle. If I get a closure here, then maybe I will think, okay, so a major area got rejected. This was a major area. If it comes down and closes below this now, I will say that, okay, this breakout was not successful and maybe it is trying to come down. Now, where it is trying to come down, if you see, this is was the previous balance zone. If it falls from here, my next target will be here, because this will be my first target, because we are primarily in a bullish market, and we will have to keep a tab on the higher lows that are getting formed, because there may be some more bulls present here. So at this point of time, what I will say is, what will be the path of the whole move is, if we come down here, if we retest, then it this will be my first target. If this breaks down, but this is a minor low. Okay, this was the major low which created this too. And if this comes down from here, we will get support in this area. If this support breaks, then we will come down here. Okay, now otherwise, one more path can be, if we come down here, we get support, we go above this high again, then we will target this high. Right, this will be okay. This is the double top now. Now if we go above this, we will go and touch this trend line. So that will be the assumption that we will follow. And this is a monthly or a weekly trend line that we have. And if you see, on the previous day, this was the expectation, right? This is where it happened. So when we started bouncing from here, that is when I said that, okay, we are going up to this area 5360. Okay, and above 5360, then this trading range behavior started, right? But if you see, even in the trading range, we are getting higher lows, right? So we should be very, very careful when we are trying to short, because we are in a kind of a channel. If this was a spike, it is not a very tight channel, but a channel whatsoever, right? So we have a very, very, very tight channel here. This is the channel that we have. And then you see, every time it is going above the 50% line, it is coming below the 50% line. So this is already telling you, it's a channel, it's a TR with an upward bias, and we are moving within that. So you'll have to play that accordingly. And if I am playing in this area, I will try only to go long. I will not even, I'll scalp on the short side, maybe 1 2 points, but I'm not going to hold for this whole position, because this is so small, this range, it will take one candle to take me completely out from the short side, right? And then again, the next day, let me remove all these lines. Is it making sense?
Yeah, yeah, it
Yes.
makes sense.
Okay, then on the next day again, if you look at the next day, we were looking at this area, right? So this was our TR. This is what I considered to be the TR, and we also had the body gap alive here, right? This was my body gap. Correct, and this was the balance zone. Now when we were here, I was expecting that price will come up at least to this balance zone. If this can be taken out, price will come to this balance zone, and then we will see what happens. After it came to this balance zone, what did it do? It created a nice, yeah, so it created this megaphone structure here. Now what is this megaphone structure? After this megaphone structure is a bull flag, and the next day we opened up here. So this was telling us that the bull flag is in effect. Now, if you look at this, if you look at just 1 day or 2 day, you will not get the full flavor. What you need to do is, you need to look at it like this. As soon as you look at it like this, when you zoom out, you will be able to see that you are in this kind of a channel. Right? Let me tighten it a little bit. Yeah, you are in this channel. Now, what is this channel? What is this telling you? We are going up. This is the movement. And now we have a kind of a weak bearish channel where we have tried to break down once, twice, false breakdown four times. We have tried once, twice, thrice. So we are waiting for this line to break out now. And then we will say that, okay, this was our TR. This will be the target, right? So you take your TR once this breaks out, once this high breaks out, you are out of the TR, and you will get this target. Now, also there is another concept of dueling lines here, right? What are dueling lines? So if you see, this is a double top, correct? Let me put it in a different color. This is a double top, and on top of that, you have this line. So it is highly possible. Someone wants to join. Admit. It is highly possible that once price crosses over this area, it can create this kind of a structure and then move up. Okay, there is also a possibility of that. And then this will again create a kind of a triangle, and we will have to wait for the triangle breakout. Maybe it will come down here and then it will keep going up here. But again, you will have to make sure you have your 5473 area, you have your 5483 area, and then you come back to the top again. Okay, so at that point of time, when we are above this, we have broken out, it will create the breakout gap, right? Let me erase this. Suppose we broke out of here, and instead of going straight up, we came down this far and then we went up. At that point of time, what happens is if you draw your box right here, this becomes your breakout gap support. Okay, and these breakout gap supports out of this major levels, they work wonderful. Okay, you can actually buy with limit orders here. If you see that the candle has been, there has been 3, 4, 5, 6 candles in this area, then it is trying to retest back, and you can put a 50% order right here or at the bottom, or wait for it to dip down, give you a very strong bullish bar, and then you enter on top of that. Okay, make sense? Jojo, any questions from you?
Can you hear me?
Yes, I can.
Oh, okay, because it says my mic system has it turned off.
No, I
Um,
can hear you.
okay, just wondering what time frame, not time frame, but I can't really see the bottom times. Are you looking at 24 hours, 36 hours? What
So
is this time
this is
frame
5 minutes time frame. This is 5 minutes RTH chart. See, RTH 5 minutes.
No, no, no. I mean, what time? Like, is this from yesterday, the day before at open, or 2 days before, 3 days before? I can't see the date.
These are the last. This is the last week. Okay, this is
Okay,
Friday. This
okay.
is
So we can.
Friday. This is Thursday, Wednesday. This is the whole of last week. It started from Wednesday here, right? This gap
Okay,
up was on Wednesday after the CPI data came out.
okay,
Okay, and now you see what happened here. Okay, this was the breakout gap that we created initially, and then this is the breakout gap that we have left at this point, right? See, it is coming down, but there are enough bulls in this area. If I put the whole thing here like this, if I take the box and draw the whole thing, and then we draw a fib inside it, we have not yet touched the 50% line of this breakout gap, of the initial breakout gap. So my breakout gap is still holding, right? So once it goes below this 5406 area, then I will start thinking that, hey, it may actually go and close the whole gap here. Right, so that will be the idea that will work at that point of time. Along with, we will look at how many points it has moved, how many legs it has completed. So all those things we will be looking at. One more thing that you can do is, in order to find out targets, is the way we put these channels. You copy this channel once it moves up, and you put this channel on top of it again. Okay, so this is the way you gain more control or understanding on your chart. We know there can be some. Well, this is nothing there yet. We know that we are in a bullish move. We know that we are going to move in the bullish direction as long as this channel does not break down. We know there have been multiple attempts to break this channel down. So once it crosses this, maybe from a channel perspective, it will try to go and hit this 50% line. Once it is above this 50% line, we are above this breakout area. This is the target that you will have touching of this line. This breaks out, you may actually draw one more, because once there is a channel, it will try to replicate the channel in different ways. However, on the other side, if you see, there is another channel that got created here. So these are the things that you keep on doing intraday, right? You look at the charts and you keep on doing this intraday. If you look here, this is another wide bull channel that we have, inside which it is too much lines here. Let me remove some. It will become very confusing. So see, what we have here now is a diamond. Okay, and these structures are really good. Even if it comes down here again and fails and goes up here, that means we are going to touch this. The first breakout of a diamond on the top may actually fail. However, now this is the intraday chart, right? If we go and look at the monthly charts and we remove all the drawings, okay, and we draw a line here, if we say this is a wedge, and if we say this is a wedge, now these are your dueling lines. This is where we are stuck at this point. If we have to notice that if it goes and comes down below this line again, maybe it will come down here. And that point of time, we will say that, okay, this was a failed wedge breakout. And it may come down here. These two will become dueling lines at that point, where this will act as support, resistance, and this will act as support. And then we will have to see what is breaking out, where we are going, right? And if this is how we end the month, for example, on the monthly chart, we will say that this was the breakout leg, and maybe we are going to this. Now, sitting at this level, this 6,000 does not look very far away now. This is a very, very achievable target at this point of time, right? Because now let us look at the four period ATR. Your ATR is at 307 on the monthly chart. And if you close somewhere here around 5,500, your next stop comes, and if we keep going up, your next stop at 300 points comes to around 5,800. Right, so that is where the weekly bulls may be targeting at this point, or the monthly bulls may be targeting at this point. Then you come down your levels. You now know your monthly levels. Now you see what is happening on the weekly chart. We had, let us remove all drawings again. On the weekly chart, we had one leg up, pullback. We had two legs up. Now, when the pullback happened, this was kind of your sideways movement, and see, that is where we found balance again. That is also the ATH, but this was the part where we were moving sideways. So this is your balance zone on the weekly chart, and this five again, see, 5,333, this line becomes very important at this point. However, if we are just measuring the legs, we are saying that this 5,645 line is very much possible, and from here to here is just 150 points, and the ATR is 150. So very much possible that we are going to touch this line. So this is how I am looking at my measured moves and counting. Also, one more concept is, if it does not go that far, we also take this kind of a measure and then put it back up here, and see, this becomes the target at that point. So this is the zone where price may want to reach. Okay, so this is the 1:1 of the whole leg, and this is the actual length of the leg, which we took here, and then we projected it here and put it up here, and we are seeing that, okay, this may form some kind of a resistance up here, right? And again, if we look at this high, this high, this high, look how this matches up. So if you are here, and then if you are getting rejected, you know what is happening, right? Either bulls are taking profit there, either it will go into a sideways motion, or it will have a couple of legs to the upside or down. Now, these concepts you see on the higher time frame, they act so much well. This is the exact leg that we had here. right? And see, the wedge is matching with that. The wedge is matching with this kind of a move. So if we start going up again from next week and we touch somewhere in this line, or we go above here, this may be a very good target from where bulls may start selling off, or we may actually break it out. I'm actually thinking it is highly possible to get to that 6,000 level now, the 5950, that area. It is highly possible. There is nothing stopping the market from going there at this point. And if you see this kind of a this was the tight bull channel, right? This was the tight bull channel we had. And once we broke out of it, we came down here. We have created a new extreme. But after the creation of this new extreme, we still do not see any intention of the market to move down. So we are still long. We do not have anything to say that the market is bearish. We just have broken out of this balance zone. This balance zone got broken out, and we have created this move. And now maybe we are going back up here. This may be the target. Even if we come down, there is a high chance that it may try and retest here. Very high possibility, right? It goes up. Next week it goes up. It comes to this level, 5584. I'm talking about ES1 here, right? It comes and touches this 5584 line. ES1, these levels will actually translate to your ESU from tomorrow. Okay, ES1 and ESU are now same, and ESM will lag a little bit because liquidity will come out of that. Most of the people are taking, this is the last week of ESM, so most of the liquidity will be taken out from there, and it will be put into the new ESU contract, which is the next continuous contract, right? And that is how I'm expecting it will move. If it comes up here, this is the 5588 is the target, and then if we break out, then we come to this area. If you see that we broke out of here, rejected this area, and came back below this wedge again on the weekly time frame, you know that there may be a chance of it to come back down a couple of legs at that point, maybe on a lower time frame. The weekly chart is not yet suggesting that we are bearish. If we look at the daily chart now, we have a gap up bull flag. Nothing else is happening here. We gapped up, we created a bull flag here, and now it may actually double this gap on the upside. And if you see, that will also bring us close to the target that we are talking about. If we say this is the gap that we have, see, we are right at this line where we were thinking 5584 to 5589 in that area. Correct. So that is how we are. I am putting on my major support and resistance area ideas in my head. I have those marked on those specific time frames. Like the weekly resistances are marked on the weekly, the monthly resistances are marked on the monthly. These wedge lines are marked there, and in my final monthly and weekly when I'm in a lower time frame, I have some kind of notations in the lower time frame about the higher time frame areas. I do not draw all the lines everywhere because then I will not be able to see what is happening on the chart, right? But I have an idea in my mind that okay, this is the area that the market may target. This is the area where I will take profit, and this is the area after which I will wait to see what happens, how the market behaves, and how we are going from there, and then take my next trade. Make sense?
Yes.
Yeah, makes sense.
Okay, let MM for scalp. Okay, let us go to the 5 minutes chart. When you are looking at these kinds of higher lows getting formed, right? When you see these kinds of higher lows getting formed, and then you see this candle, if you are going on long on this can be your aggressive target. If you are counting from here, I keep my targets like this. I am not that aggressive in calculating my targets. So if I am going long here, I will see how this candle behaves. And if I'm scalping, I will come out here. But what is happening here? We have two strong candles, right? And after these two strong candles, we have this body gap created. Correct. Now, there is, if you are long here, even if you have taken profit here, you are holding on to your runner. You have to hold on to your runner. looking at the market structure, that if this area does not break down, there is a big chance that we will keep going up. How about that? This was the first pause, after which we started a pullback. And if you see, we had a two-legged pullback here, right? So we will count at this point of time that, okay, if we are at this pause, and if we say that we will get a 1:1 of this, I can hold my runner till here. And that is exactly what happened, right? We had this climb. This was a spike. After the spike, we had a two-legged pullback. Pullbacks creates the channel. They created the channel, and we went up back to the target, right? So
That's
these
huge.
this is, yeah.
Did it also retest that? Did it respect the fair value gap, or did it followed it,
See,
right?
fair value gap is considered with just the wicks, right? So you will say that this
Yeah.
is this is the fair value gap. Correct. So that is the
Yeah.
difference between how Michael teaches it in his ICT process and how price action traders treat the body gaps or the fair value gaps as. So they will say that this was the fair value gap. We came deep below
Uh huh.
it and then we went long here.
Yeah, it
Right.
spiked
So
up.
this will be the fair value gap, or they will get into limit orders right here. I don't always trust the limit order, especially in a ranging market. Plus,
Mm-hmm.
this is the 50% of this range. And based on
Oh,
price
okay, I
action,
see.
we do not enter any trades here, right? Based on the price action concept, we do not enter any
Oh,
trades
okay, and
here.
then it broke the ranging, and then that's when you would hop in.
Correct, correct, correct.
Okay,
And that
awesome.
is
Thank
what,
you so much.
and that is why if I am looking at the 5 minute RTA chart again, we are saying that okay, this is the whole range. If it breaks down
Mm-hmm.
here, it may actually close the gap and create the range on the downside, duplicate the range on
Yeah.
the downside, or if it goes up here, then we are going to duplicate the range on the upside again. So
Okay,
that is
awesome.
how
Thank
you
you so
set
much.
your targets. You keep on setting your targets. You keep on moving your targets. You need to understand where the market is,
Yeah.
how is it going. If you look here,
I
there
have a
was,
question.
yeah, go ahead.
Go back to where you said we do not enter anything
Here,
here,
here, here, here.
and I want to know why. Um,
Okay.
and wait a minute now. Is that at 50? Isn't that about 50% of something? That's what I was thinking. At 50%, you would or enter, but you said we don't enter. So
No, no,
we
no, no.
hold.
So if this is your trading range, you are shorting here and you are coming out here. You are going long here. You are coming out here. So this is still a trading range, right? But what changed here is based on the trading range concept, you will not enter a trade here. What changed here is this thing. Okay, we were having higher lows. This tells me, okay, if we came down here, this was the first entry high, this is my second entry high. I will try to go long here. And then if I am going long here and I want to keep a wide stop loss, this will be the kind of a move that I am expecting. And see, we got the target. If this was your first move, this was your second move. Right? We
Okay,
went up, we came down, we pulled back again, two-legged pullback done. Now this is the second attempt that we are making. On the 5 minute chart, it looks like it is sideways. Go and look at the 15 minute chart once.
but it was at the 50. The top of that gap was at about 50%. So that's where you would go long, right?
Yeah, yeah, I would go long here, and I did go long here the other day.
Okay, I just wanted to make sure I understood what you were
No,
saying.
no,
Okay.
I did go long because my point was it is not even touching the 50% line here. There has been a very good bounce from below the 50% line. We have our body gap created here. We are not even breaking the body gap down. We are not even trying to go back to the 50% line of the whole range. So this is a very, very small stop loss to have, right? If you're trying to scalp on such a day, 22 to 19 is just 3 point stop loss. And then you have your support line here as well. So you can go long here. And if you draw the parallel of this, if you draw the parallel of this, see, we are in a channel. At this point of time, when we were here, this was the best. best possible line that we had, and we missed it by a tick here, right? And then we came back below the channel, went up, created a new extreme, and then we are pulling back again. So that is how this whole thing moves. And if you notice, and if you have the conviction that okay, whatever that we know, whatever we have learned, that is actually working. See, we had the channel, we broke the channel, we tried to break the channel multiple times, but ultimately we went back and created a new high. So instead of trying to short here, again you are seeing we are creating higher lows. You can scalp on the long side, which will give you better profits here. Correct? And on
Yeah,
the
which is
other
crazy.
hand,
I just have a comment. It makes it
yeah,
so hard if you're in a trading range. The rule is to sell when it's high. It's going to go back
correct,
down to the
correct,
other.
correct, correct,
So it's
correct,
really
correct.
confusing.
Yeah, so that is why you have to look out at the breakout areas, right? So this was the lowest low of this whole thing, right? Of the 3 4 day range, this was the lowest, and we did a double bottom here, and we kept going up. So this itself is telling you that okay, the bulls are not going to let go. They are going to take it higher. Now this is a setup that I look for. We have been coming down, we try to push up very hard, but this channel is very tight. This needs another leg down, we get another leg down, and immediately the bulls are trying to buy it back again. And we have such a strong bar, we have a follow through, and we kept going up. Now since you said that this will need another leg, you have to say that this will need another leg, right? And that's the leg that you got here. So even when you are trading range, but you are creating higher lows at this point of time, you have to say that okay, if we were expecting this kind of a second leg for this, now I have to expect a second leg for this also, from wherever, maybe from the bottom, maybe from the top, but there will be. So that is when I start looking for channels. Whenever I see higher lows or lower highs, I start looking for channels, and I start looking for support areas where the candles may actually support. If you look here, if I bought here at a with a limit order, right, instead of a stop order above a bull bar, you would have, and if you were in a scalping mode, you will lose once here, you will lose once here, and you will keep on losing as long as you do not buy above a bull bar and scalp, if you are in a scalping mode. So when you are trying to scalp, make sure that you are not scalping. It's my suggestion, you can scalp, I'm not saying you cannot, but when the market structure is not clear for you, scalp in the direction of the trend. Do not try to do the counter scalp. Let the market go. You don't need to capture every move. Your target is to capture 20 points a day, right? If that is the target, there are 81 bars. You will be able to catch 20 points a day. But one strong bear bar, or if you have not been able to catch a trend in the beginning, most of the time what will happen is you will see that there is a big drop, and you will come and enter here where the market is already reversing, and that is because you are not counting how many points it has already fallen, and you are not following the market structure that we have. If you start from here to here, we already got 15 points, and we were seeing that most of the moves upside or downside were actually 15 points. If you see here, we came down here, this is 17 points, right? If you see that we went up from here again, we got around, we were getting the rejection around the 17 18 points again. So why will you try to short once we have a 15-point move down? You cannot short here, right? You are already at the bottom of the trading range, at the lower 23rd of the trading range. Even if you are shorted here and you see this bar, this should be your primary indication that hey, I am wrong, I should come out here. Do not hold on to your shorts at this point, because the market and the overall structure, it is bullish. Okay, we are in a trend here, we are following this trend line down, but okay, if you want to sell, this is your sell area, right? You sell below this candle because we came so much to the top, and you can scalp around how much? You can scalp around 2 points here. right? So you have to look at the structure of the market and say that this is going to happen, expect this is going to happen, follow that what you are seeing. Okay, if the plan that you made in the morning or the plan that you have, the market is not going according to the plan, take a step back, see what is happening now. If this was your plan, what was your plan B? What was, if your plan A was going wrong, what was your plan B? Look at your plan B, see if the major areas that you are thinking are getting broken down. If yes, yes, that is the place to short. But just because one leg or one big red bar when your actual bias is bullish, do not completely change, throw your plan out of the window and just short and try to make the money back. That is where, that is what happens when you are doing that. Most of the time what will happen, since you are on Apex and you are trying to save your account, you will say, oh, I'm losing $300, let me put in five. I have done that myself. Trust me, I have done that myself, and I have learned a very expensive game, a very expensive lesson in that. What happens is, if you see one bear bar like this, and if you short here, you start short here. Once you come up here, you will short again. Once you come up here, you will short again. And then, if you find actually another candle, by that point of time, you are already in a $1,500 to $2,000 loss, and then you will be completely messed up. Take your losses early. If you think that the market, okay, okay, another thing, symmetry. Three bars, three bars, three bars. You are seeing that the bears are not able to take it beyond 3 bars. First time it happened, second time it happened. This is the midday. Around 11:45, it has already shown you that it is incapable of going beyond 3 bars in the first two legs. Wait to see if you get a fourth bar. You know you are in a TR. You know that once it comes down here, you may actually again get a buy signal, a chance to buy and reach the top. So why are you trying to get short here after 3 bars and this inside bar, or outside that bar almost, right? So there is no point. So this is how you have to keep a look at what is happening. What happened here? This was the low of the day. We came down, we actually closed below the previous low of the day, and immediately we took it up. So that itself is telling me that, okay, this is not going to break as of now. If it breaks, we will see. If it breaks and it does not come down, does not come back up, maybe we will get a measured move of this whole TR below, but not before that. You cannot sell in this area. If you are not short here, you cannot start your short here.
Yes, the question was shorting at the top of the trading range or not.
Yes, you can short here. If you have already understood that this is the trading range, you will short here and you will come out somewhere close to the 50% line. Because
No, I mean move 20 minutes over where it's going sideways. That's what I'm talking about. The moment of indecision, whether it's going to break out or not. Or and you said just wait. I think the answer was just wait and let it show you.
correct, correct. And then on such a day, you look for these kinds of things. Do not first thing, enter the market based on a structure that you see. Okay, only based on the structure you can enter the market, and then you have your okay. Now, what made me confident to hold here? So that is one more thing I will tell you. This was the previous high of the day, correct? We got to the previous high of the day here. Till this time, it was rejecting, right? We know that there were bears here. This is the first time we closed above the high of the day. We came down 2 legs, and then we got this strong reversal bar. We closed above the high of the day, and this time, this is the strongest candle of the day. No wicks at the bottom, no wicks at the top. And then what happened? We had a follow through. Okay, so this says breakout successful, follow through successful. This was at this point, this is not the high of the day, but this was the high of the day here, this micro double top, which we were not able to cross. We crossed it once, we came down, we pulled back up again, and a follow through, which is now telling me that this level has been accepted. Okay, even if there is a pullback, there is a very high chance that we will get a 1 is to 1 of this particular candle. And if you only measure this candle, you did get a 1 is to 1 of that. Okay, so you have to understand that structure. And if you're saying that okay, 272225 points, I don't want to hold, go to micros. If you don't want to hold one ES mini contract through this whole thing, go to micros. Play with 5 micros, so you will reduce your stop loss. If this is your stop loss, if I was doing it, this will be my height, not this. This will be my height. This is what I will try to target from this, because I will say that the body of the bull started from here. But even if you are doing, and you think that this is too big a range that you are not comfortable holding with, you go ahead with micros instead of one mini. Since it is late in the day at around 12:40, you know that it is in a TR and it may not go up further. Play with 5 micros. Just try to scalp 1 is to 1 of this. Even if you come down instead of 250, your loss is 125.
Hey, Sabuj, this is Naveen. Can I add something?
Anyway, yeah, sure. Go ahead.
So, one of the questions was, how do you identify ranges early in the day? And this is something I've learned over the years and through a couple of mentors. I mean, if you look at the chart until 11:30,
Mm-hmm.
right?
Let
So
me pull
my
your
earlier,
indicator.
yeah, until 11:30. So my earlier mentors used to always tell me, how do you identify if the price is in a range early on before you take a trade? So their rule of thumb, and that's what I always follow, is sharp angles denote trading ranges. So look at that drop from early morning 10 a.m., 10 a.m., then three candles, sharp angle,
Right.
sharp reversal, sharp down, sharp reversal. This is, if you look at these angles, it implies its trading range.
Correct. So the same
So
thing, big up, big down. That
big
Al
up, big
says.
down. Yeah, big up, big down confusion.
Yeah, exactly. And then he also says that take the L2s on the top of the trading range, take the H2s at the bottom of the trading range, and then you have to remember, okay, my micro double top and my micro double bottoms can be L2s and H2s, right? In a trading range here. So we had this micro double top and we came down all the way. We had this higher high double bottom here and we went up all the way. So this is what they have been doing all day. But on the bigger picture, you look at these things that okay, they are trying to bring it down, but every time they're trying it, they're actually creating a higher low and keeps on going up. So this is a trading range, but this is a channel. A channel is also a trading range, right? If you look at it, we talk about a three touch wedge. If you look at Al says that he does not believe in a triple top, but if I look at a triple top, I look at it that okay, that is a three touch wedge. So maybe there will be a breakdown or a breakout now in whatever direction. So there may be two legs down now, and if we go up and try the fourth time and we start going up, okay, maybe it will be successful at this point. Okay, so there are multiple ways of arriving at the same solution. I am not saying that the way I am doing it is the perfect way. So there are multiple ways of arriving at the same target. There are multiple ways of analyzing the money and analyzing the market and getting to the same result. Right? You have to pick up a comfortable way where which makes you feel that the market is going to move. And I can tell you there is A, there is B, there is C, there is D. But whether A is good for you, you find A is faster on the chart, you find B is faster on the chart, or you find C is faster on the chart. Those setups that you have to sit and decide that okay, this is the setup that I can identify. Whenever I see this setup, I will enter the trade. Okay. Like I always say, you can have a plethora of knowledge. Execution is a completely different animal. Okay. I mean, execution also means I see one red bar, I come out of a long trade. I see one green bar, I enter a long trade. That is bad execution. Along with that, maybe your knowledge about the market is not what it should be. So you need to study more. I also make mistakes. You listen to my videos. I point out that okay, this is where I made a loss. I also make mistakes. It's not that I'm having 100% day every day. Maybe I have it twice a week. That okay, I have taken 4 trades a day and all 4 trades were successful. The rest 3 days it is around 60-70%. I take trades, they fail, and they're bound to fail. But I keep them limited. I have my stop loss around 350 to $400 per one contract. And when I am not confident, I am very comfortable with one contract. Even if I lose $700 in one contract, even if I lose $14 in 14 points in one contract, I know I can get it back again in the next trade. So as long as I am in one contract, I don't fret, I don't panic because I am playing with a set of 5 accounts together. Okay. And my target is okay, at least make 20 points. I do not play with all my PS together. I have divided them in groups of 5 so that if something bad happens, all 20 or whatever I have does not blow away on a single day. So I keep it in groups of 5. And in the morning, say I play 5, then okay, I made 20 points here. Okay, let me move on to the next one. I will play another 20 points in that. If I have made 25 points, 20 points in both of them, I have got 40 points across two sets of accounts. I'm good for the day. I don't have to catch all the moves. I don't need to take care that, okay, once I have got up from my system where the market is going, okay, it has gone. Then I will come back and analyze that should I have come out here? Like I came out here the other day, right? I knew that this was, and I had 3 contracts. I came out here of 2 of them. I was holding on to one. My entry was here. One of the sets of accounts, my entry was here above this. So I could have easily held on to this with a stop loss here and get the target. But okay, end of day Friday, a lot of things were there. And then we have kids at home, we have so much at home, and kids are not in school anymore. So a lot of things add up, right? And those put pressure on you. So that is why if you think that okay, it is done for the day, do not get into a FOMO. If you see the market running, oh, let me go back to the computer, enter another trade, and then immediately what happens is when you do that, you do not analyze the market properly, or you overanalyze, and then you enter a trade at such a position where people are actually taking profit, and you dump down and say
And that triggers the tilt cycle.
exactly, exactly, and you get into a revenge mode after that. So trust me, it is all here. You may have a bad day. Who does not have a bad day? If you are going to work every day, is your boss happy with you every day? No. Are you getting a 5-star appraisal every year? No. It's the same thing here. You cannot make $10,000 every day. If 10,000 is a limit that you are looking at, maybe you made 5,000 someday. Maybe you lost 1,000 someday. But do not let, if you have made $2,000 every day for say 10 days at a row, or $1,000 every day, whatever it is, $600 every day in a row, and then the next day you had a $300 loss, look at it just like a small pullback candle. You will come out of it. Do not let that bog your mind down. As soon as you do that, as soon as you say I cannot do it, I'm not able to do it, now I'll go with more contracts and try to make money, that is the worst thing that you will do to yourself or to your account or to your trading journey. You have to make the whole process enjoyable. Okay, I am understanding the market, I am taking the trade, I am taking my profits, I am realizing that the market is not going back, I am taking my stop loss and I'm staying out. So that is the psychology that needs to be followed. Do not, one red day does not define that, okay, you cannot understand or you cannot do it. Maybe that was not your day. Maybe that was a very difficult day to trade. Like this was a very difficult day to trade, especially on a Friday afternoon, right? Okay, so anything else? Or I will close it
Yeah,
here.
so Bruce, I had one question.
Yeah, go ahead.
So I trade options right now,
Hmm.
and I want to get into like futures and stuff. Can you help me like? Can you help me with my like? Can you help me with what broker to get and like how to pass my like challenge and stuff?
I can. Let us do it over DM. I will tell you what to
Okay,
do.
awesome, awesome. And also the price action group chat, the WhatsApp
Hmm.
one.
Yeah.
Does that one cover A to Z, or is it like
Oh, that covers A to Z. That's a whole.
okay? Awesome,
You will have assignments, homeworks, and everything there. It
awesome,
will be
awesome.
like
Okay,
a proper class.
okay. Thank you so much.
Okay, guys. I will end this call here today. I will come up with my analysis by today evening for tomorrow and the rest of the week. And I'll see you guys again tomorrow morning.